This is the video lecture on unemployment taxes. Now in this lecture we're going to take a look at all the various unemployment taxes that must be calculated and potentially reported to the various agencies. Now the first level that we're going to look at unemployment is at the federal level. And we actually have an act called the Federal Unemployment Tax Act, or FUTA for short. One of the requirements of this act is that we as employers contribute a certain amount of money for unemployment taxes. Now the rates involved do change from time to time, but currently we are required to pay 6.2% on the first $7,000 earned by each employee. So it's not only a percentage rate, but a cap, and it's a cap per employee. Now, what do they do with the taxes that are collected from this? Actually, the taxes are not used to pay unemployment benefits, but rather they're used for the administrative costs of actually facilitating the unemployment agency. And this is a tax that is only provided by the employers. The employees do not actually contribute to this in any way. Now, when you initially look at this 6.2%, what you have to realize is ultimately it's not going to be as bad as that, because there's another provision along with the FUTA rate that has to do with a credit. Now the FUTA credit is given to all employers, and the reason that we're given this is because in addition to the federal unemployment, we also have to pay state unemployment. So to provide us with a little bit of relief, currently they give us a FUTA tax credit of 5.4%. So what that really means is that we do not have to pay 6.2. So the actual FUTA rate that we pay is really only 0.8%. So we're going to be responsible for 0.8% on the first $7,000 earned by every employee. So to look at an example, we have a business here that so far has paid out a total payroll of $78,000 to all their employees. It says of that amount, $29,000 was in excess over and above the first $7,000 for each employee, and we need to calculate the FUTA tax. So the first thing we need to do is come up with a tax basis. We've paid out a total of $78,000 in pay, but $29,000 of that exceeds the $7,000 per employee. So we will deduct that, and that leaves us with $49,000. So that will actually be our basis. Then we need a percentage. Well, like we said before, the official word is that it's 6.2%, but we know that they give us that 5.4% credit. So really, we only pay 0.8%. So we have the basis of $49,000. We have 0.8%, which as a decimal is actually 0.008. And overall, we are required to contribute FUTA taxes of $392. And like I said, that's an employer contribution. The employees do not actually contribute to the federal unemployment taxes. Now, once we have calculated and sent that money to the federal government, what are our other responsibilities? Well, we're also required every so often, in fact once a year, to do the Form 940. This is the employer's annual federal unemployment tax return. So we have to file that every year in order to document all of our calculations and to show that we have deposited all the necessary taxes. Now, we talked earlier in another lesson about penalties, and a lot of the same penalties that apply to Social Security also apply to unemployment. If we fail to file that 940 form, if we fail to pay the full amount of tax that's due, if we pay to make all the deposits on time, if we fail to provide any information, any of these would result in a penalty. So that is why it's so important that we stay up to date on the FUTA tax requirements and make sure as a payroll professional that we are abiding by all those requirements. Now, once we talk about the federal level, then we can look at the state level. And this is the State Unemployment Tax Act, or SUTA tax. Now, to talk about the state rates, there is a problem. And the problem is that the state rates vary completely from state to state. Some of the states have very high percentages. Some states have low percentages. Some states require both the employer and the employee to contribute, whereas others only require the employer. So it really just depends on the location of the business, depends on what state they're in, and it depends on where their employees are working, the actual rates that are involved. Now, another thing that affects the state rates are the experience ratings. Usually for every state, when you see the SUTA rate, it is actually a range of rates, a low percentage all the way up to a high percentage. And that is because different employers actually pay a different rate. The rate that they pay depends upon their experience rating. And lots of factors will affect that. The size of the business, how many employees we have, how much total payroll we pay out, the total benefits, all of these things have an effect. And if we are an employer that has a certain experience rating, we can enjoy a much lower state unemployment tax rate. So the idea behind this is to reward certain employers that bring in a lot of jobs to the state, bring in a lot of payroll, bring in a lot of financial benefit. So businesses like that, they have a lower tax rate.